to another episode of the Crypto Classroom. It's your boy, JT Knows Things, and my co-host, Steve Wolterman. This podcast is for you. We are hedge fund managers. We own and operate a fund out of Cincinnati, Ohio called Bleeding Edge Capital. We raise money and deploy it into the crypto space. And we made this podcast to teach you the fundamentals that have made us successful in this space. We are discretionary long and value investors. So if you've been looking for a podcast that explains the technology simply and helps you understand the time frames and the expectations that you should have when you're in this space, and you're looking for a place of very robust information and a calm energy. We want you to understand the ups and downs, the ebbs and flows of this market can cause a lot of emotional decision making, which is not ideal. So we want you to understand the fundamentals. We want you to follow the number one rule in investing, okay? That is to understand your investment. So sit down, get out a notepad, get a pen ready, and learn alongside Steve as I teach him basic technological principles of why we love blockchain, crypto, everything computer science as it pertains to this industry. Thank you for tuning in. Let's get right to it.
Welcome to Crypto Classroom. We're your co-hosts. I'm Steve Wolterman. This is Jake Tolis. Sometimes we'll call him JT. Together, we are part of a company, Bleeding Edge Capital. And Bleeding Edge Capital is a GP and a crypto hedge fund. About a year ago, I met JT. My background, I have a small law firm. I'm an attorney, practicing mostly business tax and real estate, but I met JT, became fascinated with crypto, convinced him to put together a fund, and we've done such, and on our way now. With regard to that fund, I'm responsible for legal and operations, but JT is the head of all strategy, makes all the investment decisions. And this podcast is not about the fund, but is rather educational. And I know a lot of people that I talk to, I feel like are me, who want exposure to crypto, want to learn about it, but where do you start if you don't have the software expertise background or a technical background? So over the last year, just everything I've learned from JT, we're going to try to recreate some of these podcasts and be able to ask questions and have him educate us. I think a lot of people, as I said, like me, will find a lot of value in this.
Hey guys, before we get into the episode, I want to remind you that we are a discretionarily long fund. That means the time frames or time horizons that could be referenced in this episode, the shortest period would be 3 months, and at most we're talking about 5 years here. So when you hear about a new development or trying to understand the fundamentals we discuss in these episodes, just relax and have the perspective that this will not play out for an extended period of time, and you have time to do something about the information you learned here today. And speaking of that information, some awesome disclosures. We are not financial advisors. Nothing in this episode or any other episode you may hear from Bleeding Edge Capital could be construed as financial advice, life advice, or any other form of advice. We are simply here for educational purposes. All right, guys, welcome back to another episode of Bleeding Edge Capital's Crypto Classroom. Today, we have a very exciting guest, Cory Warfield. He's been in the industry a long time. He's also an influencer in the space, and he is here today to bring us lots of valuable insights where you guys can advance your crypto education, and we're really excited to get the episode going. So, Cory, if you would, just give an introduction to who you are and possibly what brought you into blockchain to begin with, and they'd love to know your story.
Yeah, well, thank you so much. And I worked in restaurants most of my adult life, and about a decade ago, just under, I started a company using machine learning to help restaurants schedule more predictably. And so In the 90s, I was a software tester, and coming back all these years later to starting an app and launching it, we bootstrapped to market initially, and then we raised some capital through an accelerator. And that kind of machine learning, using data to solve a problem after kind of, decades of not really being in business, not really any corporate experience, was really a strange catalyst for me. And it kind of pushed me forward to start some more companies. And now we've got a big Web3 launch pad. We believe that the space needs to be as close to carbon neutral as possible. And we also think that's where the money is. And, some of the bigger blockchains and protocols tend to agree. But I've got kind of a good, because so many people hear about even a Bitcoin or something and don't really understand where's the money, right? Why is it worth anything? Is it just because some people put money in a wallet, and what's a wallet? And there's so much friction points to getting involved. And it's funny, people say I'm a crypto guy all the time because I've been a Web3 blockchain maxi and, keynote speaker and author and all these things for a long time, but I'm not a crypto guy. And it's even so funny, I did a song called LinkedIn's Crypto Guy, and the day before I put it out with a friend of mine that's got 5 million followers, LinkedIn banned my account for talking about crypto. I was in Peru at the time on vacation, going through the mountains outside of Cusco. I thought I lost reception for hours. Turns out they'd taken my account away as I was trying to post a song that I wrote called LinkedIn's Crypto Guy, and it was a long story there. But I'm not a huge crypto guy because I don't understand some of that either. And it's so frustrating. I'll have clients from parts of the world pay me in crypto. And it goes to my MetaMask, and then I need to figure out what currency I need to have enough of to pay gas fees on, and which network to toggle. So even though I'm a huge maxi on digital currency as the future, just like I am AI and a bunch of other stuff, I understand anybody with apprehensions about crypto right now. But I'll tell a quick story from my accelerator days, and then I'll kind of show where real storage of value can come. And I think this is going to make sense to a lot of people watching this. But so this is probably 8 years ago. It sounds about right. I was in a small mountain town at this accelerator, one of the top rated ones in the world, and they put some money into the company, and we were all there living the alpine life and raising capital. And we had these sessions where they'd bring in people, like the former president of IBM, and people that had made billions of dollars, and we'd spend the weekend at this place in the mountains with them and learn. And we had one session, and the guy coming in was the CFO of Bank of America. Big deal, right? And they had over $1 trillion assets under management, and this guy basically was in charge of making all the tech work. And we had a 3-hour session with them, and they'd been kind of getting us stoked on this for weeks, right? Like the CFO of BOA is going to be here. So finally, we meet. We didn't typically meet in kind of the corporate office of the accelerator. However, we met there, and that's where this big session was. And we all met, and we were on time. And about 10 minutes later, the guy still wasn't there. Half an hour later, the guy's not there. Our managing director is like texting him because we're in the middle of nowhere. He's like making sure the guy's going to make it. And the guy's like, yeah, I'm just running a little late. Okay. Almost an hour later, right? It's a 3-hour session. This guy comes in. He's wearing jeans that didn't fit him perfectly. Like they were kind of big, wrinkled, flannel shirt, right? Just like Jake, right? Kind of looking a little bit more like a hippie than you would have thought. Not hugely so. But he came, and they had this whole seat set up for him with a bottle of water and all this stuff. And he walked right past his seat, right past the water. And he just leaned on the desk. He goes, all right, guys, I don't have much for you. He said, but I have one piece of knowledge, and it's the only thing that I think about, talk about, or care about right now. He said, and if any of you embrace this, you're going to be one of the, ahead of the curve globally in business and finance and startups and capital. And so he's like, that's blockchain. He's like, blockchain is the future. I'm sure of it. I will stake my career on it. I'll stake every penny that was his entire thing. And then he literally goes, anybody have any questions? Right? This is like, right? Like 8 years ago, Bitcoin was still, probably like a couple $1,000 or something. This is a long time ago. None of us were blockchain. Most of us, we're not so familiar with what it was. I could have told you back then it was a double blind ledger, trustless Right. And maybe know what some of that meant. But that was his whole thing. And when we didn't really have questions, our managing director asked a question or two to keep him for a few minutes, and then he left. So like this entire 3-hour session was probably 15 minutes long. And flash forward all these years later, and I've got all these followers on LinkedIn, and I'm a top voice in all these Web3 related things there, and I talk about it all the time. And I've got a newsletter that's geared more towards AI, but we've got the engine behind that has like 20 million followers. So I touch a lot of people weekly talking about technology. And in my private work, I've been working with a number of people in the space sector. So people that are starting to get into mining in space and into space law and litigation and space tourism, right? And we're so close on so many of these things, but many people watching this are probably astute enough to know that we just returned after mining an asteroid for the first time. Literally, we're able to loan, right? And so that material is now back here on Earth successfully. And NASA has forecasted, and they say this is conservatively, that there's enough wealth in just this one asteroid belt that we can harvest from to make every human being on Earth alive right now $100 billion richer, right? Like it's something like 400 quadrillion, I believe, is the number, and I guess it's a real one. So if we were to think about hundreds of a percentage point, and some of these are clean energy, sources. Some of these are platinum, and right. I mean, everything you can think of, rare earth minerals, precious metals, and if we were to be able to mine a fraction of not the whole meteor belt, but just a few of the meteorites, and we've proven that this is possible in the asteroids, the wealth that could come from that is transformative for humanity. And so here's the parallel I'll make. Imagine if one person effectively invested in, at real money, one asteroid, and that became tokenized. And you can now buy tokens, and each one of these tokens represented this asteroid, anything that came back from Earth and was sold, right? Some of these are incredibly rare, incredibly powerful. I mean, anything that you can think of, right? Now your token, as a small fractional ownership in this asteroid or this meteorite or whatever it might have been, is now worth a fraction of what that was worth. Some of these coming back to Earth will be worth hundreds of millions of dollars. So this isn't pie in the sky, although it might be, money growing on rocks in outer space. But this is where you can start to see, how else do you store that value? Right? It is a currency. It's going to come back. It's going to be monetized. How do we put that in the power of the people that believe in it? Right? Someone wants to put $1,000 up to say, hey, if something comes back from there and I can 1,000x that, maybe that's cool. Right.
So
meanwhile,
this is happening right now. I mean, so we've mined asteroids and we've brought precious metals back. What's the time? I mean, what is the time frame on that? If to go out to get to an asteroid or a meteorite? I mean, it sounds wildly complicated. It sounds like a movie, right?
Well, so if you look at what's happening with SpaceX's stock and things like that right now, and Virgin Galactic, the space economy, just in kind of dollars and cents to humans on Earth right now, is worth hundreds of billions in the next year or two. They're starting to not only plan, but plan on the building phase of the first hotel to launch in 2025. Right, robotics, and especially once you start to get these quantum computers that Google is starting to show, powering some of the robotics powered by AI. And then 3D printing and throwing 3D printers up there. Some of the new space companies are quite literally slingshotting rockets into low orbit before blowing off with fuel. So they're costing like 1,000th of, right? Like what's happening in the space economy right now is insane. It's already, it will be $1 trillion economy right now. And it will, if it's privatized, it will have to be tokenized and decentralized. Right. No government has claims on space, but if we humans are monetizing space, there needs to be a way for humanity and people that want to invest in this, early enough to get things off the ground, because all of these projects are pricey. I have a guy that's worked with all the agencies, pretty much in the world that deal with space, and he's building a space elevator. and he's got the technology. I mean, he's got patents and all of this stuff. And, he can casually say, if I had $20 billion, I could build this thing and it would work. Right. But it's
wow. Yeah. What? So, I mean, help me understand, hearing, what's going to happen, with the space industry, investing in SpaceX and these companies sure sounds like it could be a smart idea. What's the advantage of, you said it's going to have to be tokenized. Why does it have to be tokenized? And what's the difference in the advantage of it being tokenized and getting invested in that aspect as opposed to directly through owning stock of SpaceX or Virgin Galactic?
So they're hoping to get small percentages of the contracts, but there's speculation that these, SpaceXs will be companies that are doing mining and making some profit margin off of that. But who owns the asteroids? Right. The countries, either there will be a space war and some of these Star Wars type scenarios where nations here are fighting there for sovereignty and for ownership. I guess right, that could potentially happen, but I think other than that, the way that we can do this amicably is by tokenizing those assets, as such. And SpaceX can't own them, so investing in that company is not an investment in that wealth. Right. If there are new sources of wealth, and another area that there's a lot of money to be made in is the deep ocean. We're finally getting technologies that can start to monetize what's been, underneath us as humans on Earth forever. Right. But some of the components that are found down there and some of the different, deep marine life and some of it is astronomical. But who owns that? Are we going by charter treaty?
To that point, but who has the right to tokenize it? Well, I struggle to understand, because I get it. We don't have probably a very advanced space law yet. We don't know who owns the asteroids that are getting close to us. But how does one have the right to tokenize it, or how would that process? If I wanted to tokenize an asteroid, that's beyond my comprehension at the moment.
I'm gonna grab this one real quick. It kind of goes back to the fundamentals we talk about here, right?
Yeah.
Like smart contracts being encoded into tokens, for example. Right? We talked about that episode 4, episode 5.
Yeah.
So let's just say SpaceX needed funding, right? Yeah. Right now, they're subsidized heavily by the government. But let's say they did identify an asteroid in this scenario that is very profitable. They've done their scans, whatever. They know that there's approximately $2 trillion of value on this thing, but it's going to cost them $40 billion to get there.
Yeah.
They themselves could launch a project and sell a token.
Like a mission. You're going to buy into this mission to this asteroid. We're going to go out, we're going to see what it's got. So it's almost like speculating on an oil drill.
Yeah. And this would be a way for people to collectively contribute to that mission.
Yeah.
And regardless of accreditation or not, they could just buy a token.
So it's fundraising. It's fundraising for a mission project.
It's no different than tokenizing real estate.
Yeah.
Asteroid or apartment or hotel, whatever.
Yeah.
It gives global access to a project that is in need of liquidity.
Right.
And the terms of which that project operates under is enforced by code. So you don't need trust.
Yep.
Right.
That's it.
That's the big part. The reason why these investment vehicles are so guarded and so difficult and so rare is because you need trust. You need to know the people, right? I need to look you in the eye and shake your hand and be like, I'll give you $1 million. And it's only really available and accessible to people that are accredited in these situations, right? Where we're talking about blowing the top off of that, including the real estate and everything else with the 721 token standard or the 1155 token standard. We've talked about both of those on the channel. You can create terms to a business deal, have them encoded and have them enforced by a program. So I don't need to trust anyone. Screw me, not screw me. They cannot violate it.
Yeah.
So I know if I give $1,000 to this project and I get, let's say, 10 tokens back, that those tokens, the value brought back from that asteroid, let's say it's a 5-year mission. When that's all done, the net profits are going to be, distributed amongst all these tokens. less whatever SpaceX kept. Let's say in this specific example, 30% is retained for SpaceX and their profits. 70% is going to be completely is what they're raising money with, and then it just gets distributed amongst the tokens, no different than anything else that uses blockchain, the fundamentals of blockchain as a vehicle to fund a project.
Right.
May it be space, or there's deep decentralized science, DeSci. I'm sure you've heard of that. There's tons of different ways to do it.
Well, here's another great example right now is all of these incredibly cool generative AI tools, whether it's in healthcare, you're making art or movies or music, or you're using it for research or scraping the internet or whatever you're doing, right? All of this generative AI is powered by tokens, right? So a certain amount of tokens. Now imagine if a company like OpenAI ascribed a worth, right, 1/10 of a penny to each of these tokens. So now if you want to do a project that's going to take 10,000 tokens, you pay $100 or whatever, right? Now those tokens, had you bought into them before they started that economy or that ecosystem, right, you could have bought them at maybe 1/100 of a penny. And the more people use them and the more they go up, and especially if they're burning some so that they keep the supply low enough and people really want them, maybe someday those are worth $10,000 each, like Bitcoin. Right. And so, but again, I really do think it comes right back to this whole concept of it's digital custody of an asset digitally that can't be violated or manipulated. And again, I think the last point was incredible, because you don't not only need to be you don't need to be accredited, but you can now do this anywhere in the world, presumably, as long as they don't have you cut off from access to a website or something like that. So, now people around the world can really become part of a project. And I could even see a potential where a company maybe raises $1 billion in liquidity on a token raised, and goes to every government in the world proportionally and says, we're going to give 10 million to you, 20 million to you. Hey, we have permissions from everyone in the government to own that asteroid. Every government's got some millions of dollars. We now own that asteroid, right? We got sign-in from 80% of the companies countries, and the other 20% would have never had rights anyway, and we're going to put something in escrow for them or whatever, right? Now you got the world saying, okay, this startup or this company owns this asteroid, and it's all on the token base. But now if they have the rights to go and mine that particular asteroid, and they basically license that out to a SpaceX or a Virgin Galactic, it could be 1,000x return, right? So I think it really is just the storage of value and the ability for anyone to ensure that they're going to get that.
I kind of want to take the discussion a little bit, because you clearly are focused on the fundamentals. That is my thing. I'm a value investor, right? So I kind of want to have a different kind of discussion. Oftentimes, there's a lot of benefits to blockchain. Like that guy 8 years ago, anyone that knows anything, if they spend enough time looking at this stuff, they come to the same conclusion. He just was looking in the right spots, way ahead of us, right? Or at least ahead of me. And I've come to the same conclusion. Like, I'm putting my entire career, my entire life. There's a lot of benefits, but one that I focus on is digital property rights. That idea, right? So if we unpack what property rights are, that is the number one thing any government, every country needs to actually start its growth process. If you live in a state nation where you have no rights to anything, you are not incentivized to do anything, and you need to leave immediately, right? Like Ukraine, I doubt they have an office available to get a deed on a property that you buy, right? They're in war, right? So no one is doing anything productive in Ukraine except trying to survive, right? And then there are other countries where that infrastructure is not even set up. What Ethereum does, or really any public permissionless blockchain does, is allow people to establish property rights for a digital asset. Have you thought about that much? I'd like to know what your opinion is on that take, and if you may have an example or a project that might be focusing on that narrative, and that value proposition.
Yeah, well, I think again, if we can get close to decentralization on that, I think a lot of this comes back to decentralization, but that's something I'm pretty close to, specifically to what you're talking about with a company that I'm the chief growth officer of called Agora World. And we're partnered with and invested in by a company called Cesium that made Google Earths and Google Maps. They made the new version of both of them. And they're what made them kind of so sexy and AI powered. So imagine potentially within Google or some database that was recognized as being an authority, the Earth was digitized as a digital twin. And anybody that had legal documentation of owning their particular coordinates or their piece of land could get a digital confirmation on chain with a smart contract that says that is theirs until such point where they relinquished for sale or it's foreclosed by the bank or something like that. So now have what most people have been calling up until now an NFT. I don't think that name's going to stick for long, but you've got this digital ownership, kind of like the deed to your house, but it is on chain and it's digital and it lives in a wallet, and it shouldn't be something you need seed phrases and 5-factor authentication, all this crazy stuff for, but it has to be easy to access and it needs to be incredibly secure. And I think AI and other industries as well are about to be disrupted massively by quantum technologies and quantum computing, but quantum encoding and what that will do for passwords is, all of a sudden we will have the data privacy. We will be able to have supreme sovereignty over.
What does that mean? Quantum, computing and
it's an evolution of like the base code of all technology. Right now, code is binary.
Yeah.
Eyes and O's.
Yeah.
On and off, right?
Yeah.
Quantum computing is this idea that it's omnidirectional now. So you're going to have far more options in coding, and it's going to increase the computability and storage, everything by an order of magnitude. That's 1,000x easily. And the biggest risk to encryption right now in cryptography is SHA-256 is currently impenetrable, but quantum computing can do it pretty quick.
Good penetrate.
Yeah. So that would probably be the biggest risk to the current cryptographic methods used in blockchain and others. But there are quite a lot of really smart people that are aware. We're not the only ones that know that, right? So there's a lot of smart people working on that. But yeah, that is definitely going to disrupt a lot of things. The future that we see in these movies, right? There's 3 things that need to really happen. And Cory, he might be able to add to this. He seems to be more of a futurist than me. I've been very focused on crypto and blockchain, but definitely quantum computing needs to happen for us to have like sensors that are small enough to fit into devices that could easily just lift off the ground with jet propulsion, right? Like part of the issue with all of that stuff is that we don't have the ability to make things small enough to fit into consumer vehicles or consumer things. Mm-hmm. Or like, the other thing would definitely have to be some form of, blockchain to have such a decentralized way of financing developments. Like really, because there's gonna be so much money printed, but so many, there's going to be like this cascading effect of just sector after sector after sector popping up, crazy things like space exploration, right? There's going to need to be a way to bring liquidity to these new emerging markets faster, et cetera. So you're going to need the money, you're going to need the technological advantage, and then you're also going to need the ability to automate it. Once we can automate those advancements, it's game over, and that's AI and robotics. So like when AI and robotics have quantum computing, and it all can be secured through blockchain, that is when we start at the end of that. The Moore's law is going to start going exponential, in my opinion. And that's been a theory for a long time, right? We are approaching the exponential compounding effect of Moore's law, right? We're 50-something years deep. It's getting pretty crazy. So that's
have you looked at the company 1X yet?
Oh, yeah.
What's happening with humanoid robots and the kind of convergence with really the AI, but especially this AGI that's coming, this general artificial intelligence that OpenAI is all in for, and exoskeletons and nanobots, and what we see happening in healthcare. Like AI is about to cure cancer. Yeah, that's happening right now in so many ways, right? all of these things that have been generational aspirations of humanity are all going to be enabled right now, but it all needs to be on chain. And with all the fake news and stuff like that we've seen over these last few years, if everything from AI is on chain, we never need to worry about that again. If it's not, then we really do. And so the point I think we can bring back to the concept of crypto classroom is, if everything's on chain, there will be tokens ascribed to everything. If those tokens are, call it a Bitcoin, call it a whatever you want, those can be monetized, and there will be liquidity pools behind them, and there will be people participating in those liquidity pools that are going to be enjoying, financial upside, and usually in pretty substantial ways. And we're really talking, and the old guard doesn't like to hear this, and it's very clear why, but we're talking about removing a lot of the middlemen from finance in every industry.
Right.
We're talking about
I understand you're saying like it needs to be on chain, for security. We don't want private companies running loose, like with AI and super advanced technology and creating problems. But how do you remove, people agree, if a company or people can get together and do that privately, aren't they going to want to do that as opposed to go on chain? Doesn't this take regulation at a higher level to say,
no matter what,
at the world level, we're going to put this?
It needs to be on chain, and it might be something that we've just brushed over, but there's really no way of proving that any action taken on behalf of a brand, an article, and fake news was how we started this conversation, any form of content that would open your mind to whatever investment vehicle we're talking about here, you would not know if it is AI generated or not.
Right.
If it's all on chain, you would be able to prove humanhood. That sounds like a futuristic problem, sounds crazy, but in a few years' time, knowing if whatever's happening is done by an agent or a human is going to be very, very important.
Well, what I'm saying is, I get it that it should be on chain. It'll be better if it's on chain. But what I don't understand is how, it's not easy to remove the old guard, right? Like, how do you, what's it going to take for that to happen?
There's a lot of fears around that. Corey might have some good ones.
Here's what I think, and I think we're already seeing it, and I think we just need to remove the friction from adoption. I think people don't need to know that they're using Web3. People don't need to know that they're using something that's tokenized. People don't need to know that they're using something that's on chain. It really is the underpinning. But I think we're going to start seeing it pop up everywhere, and I'll give you some great examples. Insurance. If everything on insurance is minted on chain with a smart contract, it is going to de-risk. It is going to make insurance companies able to be worth far more money, be far more profitable to their shareholders and their stakeholders, right? There's really no downside except people can't pocket a whole bunch of money, right? And so now let's go to healthcare. If your health records are on chain, right, they're tokenized, and the right medical professional can access them only when they should be, and that they are, but you want to sell that data to other companies that want that data, that frankly have paid millions for it before, and that money's been made by the Googles and the big guys, right? But if all of a sudden we can monetize that because it's on chain, it drives down prices of so much within healthcare. So I think we just start seeing it sneak in these back doors where it's too good not to use it. And all of a sudden, that probably is, we're probably going to see middle management in industry after industry start to fall off. But I also, speaking of being a futurist, I believe wholeheartedly, really with no doubt in my mind, that AI is going to take almost every job that humanity's ever done. Will there still be people that paint? Sure. Will there still be people that write code? Sure. Will there still be people that clean garbage and bathrooms? Sure. But there won't need to be. And I really think we're going to see huge percentages of workforce in every industry just be displaced. Well, but if the technology using tokens is still generating the money, and as long as that's not just making ownership trillions of dollars richer, but as long as it's decentralized, tokenized to where there can be upside for everyone. I'm big on universal basic income. So that's one of the things that we look at that as doing. And but everything can be a storage of data. I'll give you the craziest story I just posted about on LinkedIn the other day, and this is probably nothing that's ever been thought of by the average person that thinks crypto. There's a guy in South Korea that turned his toilets into a mechanism to trap human feces, turned them into methane and energy, use that to power water heaters, stoves, and electricity. And somehow he's able to monetize that on chain and tokenize it and give the students money that they can use anywhere on the college campus for their own poop, right? Using blockchain and cryptocurrency. And so you start to see how any, right? I mean, it's wild and crazy, but it's happening.
So back to my question of like, how do you get there? Because we talked about this last week. One, once the adoption's there, we're not even going to know it. And the reason is the companies, the old guard, it's such a better technology and a better way to do things, they will be implementing it, right? So it's not fighting it, it's we can't not use it because it's that much better, and it'll just...
It's kind of been the natural path of adoption of humanity in general, right? Like the companies that have the liquidity and the incentive structure to actually pursue the technology when it's really expensive and difficult to use, they eat the glass for us. Then the medium to small businesses, it gets affordable enough through that trial and error where they adopt it because they too also are incentivized economically. And then since the cost has been driven down, either by age due to Moore's Law and it just being cheaper or whatever, then we get adoption and it starts there. And then once we can get a product that is that easy to use where tokens and files are indiscernible and everything else, that's when retail really will start using it for literally anything and everything.
Yeah.
If I can click the way, like if you can look at it this way, websites to begin with, they sold for $50K to $1 million a pop in 1989, 1990. Now for $120 a year, I can click and drop and build a website on GoDaddy, right? It's going to be like that. The second your grandma can deploy a smart contract and not even know that's what she's doing, it's here, and the use case, nothing about that, like the fundamentals don't change. The reality is we just need some really good innovators, very good, smart people building on the stuff that, we're investing in to create a breakthrough application that just drives users. And then it just gets normalized over time. And that's just what we keep seeing happening in general in the market in these cycles. Just recently, if you watched Friend.tech on top of Ethereum, it was this app where you can monetize your following in a way. Like right now through JT Knows Things, I could go on Friend.tech. I think it's like 100,000 circulating tokens, and you can buy a token. And as I guess more and more people speculate on my future, because I promised to do the smart contract for like affiliate links, whatever, there could be revenue on my following and how famous I get, the tokens be worth more, etc. But they got 1 million users in a week on Coinbase's layer 2 base solution. So it's stuff like that. And even then the UI UX is pretty poor, but it got adopted in the bear market very quickly because of the incentive of tokenizing someone's likeness, really is what it is. No different than tokenizing poop. If I learned I could make $80 a month taking a dump, which I already do, and it takes me 10 minutes to figure out how to make $80 a month while pooping, it's probably worth it.
Why not?
Right. If I'm in college and I have a lot of money, it makes sense.
Yeah.
I'm willing to Uber Eats. I can stop Uber Eating once a week just by pooping. Right? Like once those decisions start making sense to normal people walking around, that's when we start seeing mass adoption. But people have to eat glass right now. I like saying that a lot because it really is. Like even me, like a software guy, been in it a while, I'm still eating glass trying to figure out how to get Hedera on the MetaMask, for example. Like it's a frustrating problem. You got to worry about the RPC, you got to worry about the token, the liquidity, which exchange, which wallet. I mean, literally, I'm an expert and I'm still eating glass. So it's like, we're not there. We're not even close to there yet.
Yeah.
But that's the exciting part. That's where the opportunity is, right? If you're willing to do that on a day-to-day, you'll do well.
Yeah.
Right. So
I would almost take it a step further and say most people that go out of their way to learn these frustrations at this point will probably be multimillionaires. right? Not to say everyone that speculated in crypto and lost some money on NFTs or whatever, but the people that are really understanding what goes behind, why is there gas fees? What does it mean for someone to validate something on chain? Why is this so secure? Just like with generative AI, I'm telling people you don't need to know coding to use AI. But if you learn Python right now, you will be one of the people who will make millions of dollars in AI. It's almost inevitable, right? Right now, AI plus knowing Python equals massive opportunity for the next year or so. But anyone in finance, if they learn what's really making this crypto work and not, right? And right now, it's just been a lot of bad actors because there hasn't, I'm not a big regulation guy on almost anything in life, but there has to be some consensus and some ways that you can know you're not just gonna make $10 million but then lose it all. Right? I think if that's the case, I'll keep my 50 grand in the savings account, right, and know that at least I still have $50,000.
Right. I totally agree. That's why we have this podcast. It's why I make the content. Like, I want to help as many people come to good, solid realizations. It's the fundamentals. I want people to understand their investment. You even opened up with not wanting to identify as a crypto guy because of the brand equity that has. It's trash. Because there's all these people, influencers, saying you can make $1 million in a day, click this, click that. There's just so much garbage out there. Where if people understood that this is a fundamental evolution of our experience online, right? Like that you could own I talked about this in another episode, but if you could own a fractional share of SMTP, right? And then let's say SMTP got a 1 penny share, I'm sorry, 1 penny for every message that was moved from server to server, you would be worth billions of dollars now, right? There are hundreds, thousands, probably hundreds of thousands of companies that are using simple mail transfer protocol. That's the SMTP protocol. It's just moving messages from one server to the other. Trillions and trillions and trillions of dollars. Facebook, Snapchat, Twitter, you guys get it. Like, Ethereum is, in my mind, a digital, like an internet protocol that provides digital property rights. You could, in 20 years from now, digital property rights are going to be a very serious conversation. There's already inklings of it. Cancel culture. I spend 10 years and $10 million getting 20 million subscribers on YouTube. They don't like me. I lose everything. That's a problem. But there's like real applications of the 721 token standard, NFTs, etc., on Ethereum called Farcaster, where when I make my profile, any other social app that used Farcaster's SDK or software developer kit, I could move and port all of my following regardless of whatever the terms of service are. They all stick onto me. My profile's an NFT. Everyone else's profile's an NFT. Every little engagement, every notification system, everything is an NFT inside of an NFT inside of an NFT, right? So like I can just move my master key, which would be my profile ID, onto any software application and take everyone with me. You can't cancel me at that point. So I end up owning everything. Right now, YouTube owns it all, or Alphabet owns it all. And I am beholden to their terms of service because it's their intellectual property. We just accept that fact right now. But in 20 years, no one will accept that. No one. Because they're going to own more things digitally. And it's going to be that much more critical, right? So we could own a piece of it, of that entire advancement.
Right.
That's the kind of stuff I want people to understand.
And I don't think we're 20 years out either. I think it's coming en masse. And take someone like myself. I've got almost 500,000 followers on LinkedIn. It's how I've made all the money I've made effectively in the last few years outside of, some startups that I've been part of and things like that. LinkedIn tried to take my account away, like I told you guys just over a year ago, because I was talking about crypto. I had to do some real calculus. I would have literally needed to, and I would have, but figured out how to have reinvented my brand in a way that I could monetize it as quickly as I could on another platform. right?
Yeah.
And thank God generative AI was starting, so I would have probably just started to do a bunch of faceless YouTube channels and probably been making the same money. And right, and I'm working with other platforms that are up and coming at this point. They're all on chain. But to your point, my digital identity cannot be tied to something like a Microsoft or an Alphabet. And the capacity to tokenize that, right, to be worth something as a brand and find people that want to buy into you and invest in you early. I'll give you another great use case for blockchain where it can touch crypto is being able to invest in athletes early on, right? If they tokenize part of their contract, right? Wow. And so you've been paying attention to some kid in college for a few years. His stats are great. He's a stud, or she, whatever it is. But an athlete, you think they're going to go places, and they say, "Hey, I'm selling 20% of my contract for the next 15 years, right? Until I can't do this anymore." I'm giving it for up to $1 million. You can buy in for as little as $1. Right. So now, sure, you're going to give $1,000, $10,000. You own part of this player's contract. But now, not only are you going to be watching all the games, tweeting it out to all your friends, you're going to probably be buying the jerseys, right? And so now you get digital assets. And you know what this contract is worth, particularly if they put it on chain. I'll tell you the other huge one right now in your guys' space is cap table management. Cap table management for every size company needs to be on a blockchain. Every share, all of the different terms, preferred shares, buybacks, all of this is all embedded into smart contracts. Everything's literally on an immutable ledger, double blind. There's nothing that can be done. Trustless, right? I mean, you understand that this equity is your equity, and when it's worth something and you want to liquidate that, this is how you do it. You push a button, that money goes in whatever currency you want to whatever account you want, and maybe you do or don't pay taxes on it because maybe it is or isn't registered somewhere, right? I mean, that's where I think a lot of the degens get excited and the governments get scared. But I think we're figuring it out. I really do.
Yeah. I say all that. I mean, when we first got up and running, I was like, I just wish everyone gave me Tether. Dealing with fiat and the bank and like everything we're doing with the fund, I'm like, God, here's my wallet address, give me your Tether, and then I'll just go to some website that can read my transaction history for the year and spit out everything. I mean, just from the ledger logging everything. But it's the mixture of fiat and crypto that make everything more difficult. You're absolutely right. The use case of blockchain, again, it goes back to, we were kind of talking about this before the episode, but the invention, like the idea of blockchain really is more like the combustion engine. It's just an idea that transcends something that we can even think of. Like we cannot even think of all the use cases of blockchain. No different than when the combustion engine was invented. We were thinking about, we don't want horse-drawn carriages anymore. So we come up with this Ford Model T 1903 truck. Fast forward 50 years, we have planes, lawnmowers, microwaves, HVAC, you name it, there's trillions of dollars in it. So there's never a situation where tokenizing an initiative is a bad idea. I can't think of like a negative use case for tokenization. It maybe public and permissionless. I can definitely think of negative use cases. Enterprise adoption, for example, they wouldn't want their what they pay per unit for a product they sell and what their margins are. They wouldn't want that on a public ledger, right? But on a private permission ledger, that would not be public information. They would pick and choose what is on a public readable database where everything internal could be encrypted and shared amongst every other customer on that private blockchain, similar to VeChain. That would be a great use case, right? That's a logistics blockchain that's permissioned and private, but it allows dispatchers and all the different depots inside of a logistical route to communicate via tokens, and it saves 30 to 40% of logistical cost. If you use VeChain as like TQL, for example, you could fire 20% of your dispatchers. I mean, just because there's no need to call anymore. They have RFID, that's tied to a token, and they literally burn a token at each depot. They mint a new one. You know exactly where it's at all times. It's automated. You don't have to call and be like, hey, load 184's 2 is getting there. You got to pick it up, and that all goes away with VeChain, right?
So now think about self-driving trucks and think about drones and last mile delivery and logistics for something like Amazon, which really at their heart is a logistics company. Right. And now think of all of this being tokenized and being able for them to have their own tokenized economy. If Amazon was able to get a way for people to buy Amazon tokens, and the only place they were worth anything was on Amazon. So they don't even need to register as a SEC, anything like this. It's just an Amazon token. But by using Amazon, you made more of them. So you had to use them on Amazon, and it kept people even further off of the main street and all these things. But you could buy with your real money these Amazon tokens because you were going to use them on Amazon anyway. Now you get free shipping or 5% off or whatever it is. Now they have their own economy. And right there, and so now if they're displacing their employees and they shave millions of dollars off of their labor, but that's tokenized, that can then go directly to their shareholders, who at that point become token holders.
Yep. Wow. Yeah, the use cases are absolutely endless. I know we're coming up on time here. Steve, did you have any last minute questions?
No.
You've learned a lot.
My big takeaway was, we're going to end up in this new world at some point, and it's hard for me to kind of fathom what's going to be the breakthrough of mass adoption. And we kind of touched on it last week, but one, we're not even going to know that there's mass adoption. We're going to be doing business transacting. It's going to be underlying, the technology is already there. And then with regard to moving the old guard of, will companies block that, because it's going to become decentralized? I think what I heard today was this technology is so superior that they're going to be adopting it, which is going to help get us across the threshold. So that was my big take home today.
Good.
Was what I thought were the barriers to this are going to utilize the technology because it's so superior. And then if that's, all said.
Yeah, absolutely.
Yeah.
Awesome. Well, Cory, you've been an absolute pleasure. We are very grateful that you came onto the show. We will have this live for you and everyone else probably in the next week or so. So thanks.
Yeah. Good to see you. And Steve, it was nice to meet you. And I hope people that watch this benefited from it. I had fun.
Yeah. Thank you. It's fun having you on.
Awesome.
Thanks, guys. Have a great weekend.
All right, you too.
See you guys.
Thanks so much.
It's your boy JT Knows Things, and I'm back to give you those sexy disclaimers. Everything in this cast cannot be interpreted as financial advice, legal advice, accounting advice, and pretty much any other advice that you may or may not be gleaning from the episode. We are simply documenting all of our research for an educational purpose only. We thank you so much for tuning in and your support, and until next time.